Financial statements are dash of the accounting process, that is end product of the accounting process. So where we will come across cash flow statement. So under cash flow statement, we will record all the cash inflows as well as outflows of the business. As per Companies 2 subsection 41 of the Companies Act 2013, all companies are required to have a uniform financial year. So under assets, you have only two classifications, non-current assets and current assets. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today I am going to discuss chapter 3, that is from part B of your syllabus, that is financial statement of a company. So in our part B, your first chapter is issue of shares, and the second one is issue and redemption of debentures, and the third chapter is financial statement of a company. So let us see what is this financial statement. So in your first PUC, you have learnt about financial statement of a sole trading concern, where we had to prepare trading profit and loss account and balance sheet. Now coming to this second year, you are going to learn about this financial statement of a company, not a sole trading concern. You are going to learn about financial statement of a company. So let us see what is this financial statement. Normally, you know the meaning of financial statement. So these are the statements which are prepared when at the end of the financial year. To know what? To know the profit or loss of the business and to know the financial position of the business. So here also your financial statement purpose is one and the same as that of sole trading concern, which is prepared at the end of the financial year to know the profit or loss of the business and to know the financial position of the business. So let us see about the introduction and meaning of financial statement. So financial statements are the end product of the accounting process. So they might ask you for 1 mark. So financial statements are dash of the accounting process, that is end product of the accounting process. So you know our accounting process starts from recording from journal, then transfer into individual accounts, that is your ledger accounts. Then we will prepare a statement which is known as what? Trial balance. After that, this is the end result of your accounting process, where we will come to know about the profitability as well as financial position of the business. So or you might get a question, dash, that is dash are the end products of the accounting process. So what would be your answer? Financial statements are the end result or end product of the accounting process. They provide information about the profitability and financial position of the business. So how we will come across profitability of the business? By preparing what? That is trading profit and loss account and a sole trading concern. Here also we are going to prepare statement of profit or loss. By preparing that, we will come to know about the profitability of the business. And how do we know or how do we ascertain the financial position of the business? By preparing the balance sheet. So, by preparing the balance sheet, we will come to know about the financial position of the business, and by preparing the statement of profit and loss, we will come to know the profitability of the business. So, overall, let us see. Suppose if they ask for 2 marks, what is financial statement? Then how you have to answer? Financial statement are the basic and formal annual reports. Why it is called as annual report? For a particular year, we are going to prepare the financial statement, that is end of the financial year. So it is overall the transaction of a whole year will be ascertained and we are going to prepare that financial statement. So financial statement are the basic and formal annual report through which the corporate management communicates financial information to its owners and various other external parties. So you know there are various external as well as internal users who will be waiting for the financial results. So what do you mean by financial statements? So these are the basic as well as formal annual reports which is prepared by who? By the corporate management or by a company. So which communicates what? Which communicates the financial results of the business to whom? To the users of accounting information. So this would be the meaning of financial statement. So they might ask you for 2 marks, what is financial statement? Then you have to write this answer. So as per section 2, subsection 40 of Companies Act 2013, financial statement in relation to company include the following. So you know the recent act on the company is Companies Act 2013. Let us see what are included under Companies Act 2013 for the financial statement. So the first one is a balance sheet as at the end of the financial year. So we have to prepare the balance sheet to know the financial position of the business at the end of the financial year. A statement of profit or loss for the financial year. So why the statement of profit or loss is prepared? To know the profit or loss of the business. And the next one is cash flow statement for the financial year. So where we come across cash flow statement. So under cash flow statement, we will record all the cash inflows as well as outflows of the business. A statement of change in equity if applicable. So based on the applicability of the company, so they can prepare a statement of changes in equity. And the next one is explanatory notes. So wherever necessary, a proper explanatory note has to be included in the financial statement. Hope you are clear with this. As per Companies Act 2013, so what does financial statement should include? So it includes the balance sheet as well as statement of profit or loss, cash flow statement and a statement of changes in equity if applicable and explanatory note. So this is about the Companies Act 2013 in relation to financial statement. One-person company, small company and dormant company are exempted from preparing the financial statement with their financial statement, are exempted from cash flow statement with their financial statement. So these are the company like one-person company, small company and dormant company. So they are exempted from preparing cash flow statement. So they need not prepare the cash flow statement along with the financial statement. Other than that, all the companies have to prepare these above statements. Okay, so this is about the financial statement, how it is included under Companies Act 2013. Now let us see what is this financial year. So as per Companies 2 subsection 41 of the Companies Act 2013, all companies are required to have a uniform financial year. So in your first PUC, you have learnt about accounting period concept, which tells us normally our accounting period as per Companies Act 2013, our accounting period should begin from 1st April and ends on 31st March. So if they are following calendar years, certain countries might be following the calendar year where they have to follow the accounting year from 1st January to 31st December. Now, as per Companies Act 2013, so how does the financial year should be? So, as per Companies Act 2013, Section 2, Subsection 41, so companies are required to have a uniform financial year. So, they have to maintain a uniform financial year, which shall be a period from 1st April to 31st March every year. So, as per this Act, they have to maintain a particular uniform financial year which starts from 1st April to 31st March. Only companies which are holding a subsidiary of a foreign company. So I have told you in foreign countries they might follow different financial year. So they might follow the calendar year also. So only companies which are holding or subsidiary of a foreign company required to follow a different financial year for the purpose of consolidation of its account outside India may apply the tribunal for a different financial year. So there is the exemption for these types of companies like holding or subsidiary companies where their branches will be or where their headquarters will be in the foreign country and they are exempted to follow this financial year which starts from 1st April to 31st March. Now, Section 129, subsection 1 of the Companies Act 2013 requires that the financial statements of the company, so as per this act, so let us see what are the uses of this financial statement. So, or what are included in the financial statement or what is the necessity of preparing financial statement. So, the first one is shall give a true and fair view of the state of affairs of the company. So, your financial statement should be in such a way that it should give a true and fair view of the state of affairs of the company. Whether the company is in profit or loss, a true result has to be given. And the next one is shall comply with the accounting standards notified under section 133. So as per section 133, what they have mentioned the accounting standards. So the financial statement should be prepared by taking into consideration all the accounting standards which is mentioned under section 133. Next is shall be in the prescribed form given in the schedule 3. So it should be in the prescribed form only, which is mentioned under Schedule 3. The prescribed form for the preparation of balance sheet has been given in Part 1 of Schedule 3, and prescribed form for the preparation of statement of profit or loss have been given in Part 2 of Schedule 3. So, under Companies Act, Schedule 3, Part 1 and Part 2 is for preparation of balance sheet as well as statement of profit and loss. So, Part 1 of Schedule 3 are prescribed form for the preparation of statement of profit or loss has been given in Part 2 of Schedule 3. So, your Part 1 of Schedule 3 will be balance sheet and Part 2 of Schedule 3 will be the statement of profit or loss. The Board of Directors shall present the financial statement before the shareholders for their approval. So, you know, shareholders are called as real owners of the business. So, and they are going to appoint the Board of Directors through their vote. Correct? So, here the Board of Directors shall present the financial statement before the shareholders for their approval at every annual general meeting of the company. The auditor's report and director's report must be attached to the financial statement of the company. So, these are the certain conditions which is given under Companies Act 2013, which tells us a financial statement should be in such a way that it should give us true and fair result of the financial position of the business and should be compiled with accounting standard, which is mentioned in section 133, and your Schedule 1 of Companies Act, Schedule 1 of Companies Act, Schedule 3, Part 1 of Companies Act should be balance sheet and Part 2 of Schedule 3 should be statement of profit or loss. And next it tells us the Board of Directors should present the financial statement to the shareholders in the annual general meeting, and along with that auditor's report and director's report should also be attached to the financial statement of the company in the annual general meeting. So these are the certain conditions. Now let us see the next concept, objectives of preparing financial statements. So they might ask you for 2 marks. So write any 2 objectives of preparing financial statement. So you know the main objective of preparing financial statement is to know the financial position by preparing the balance sheet, and to know the profit or loss by preparing profit and loss account. So let us see what are the few more objectives here. So the first one is to present a true and fair view of the financial performance, that is your profit or loss of the business. Of course, our intention is to know the profit or loss of the business. And the next one is to present a true and fair view of financial position. So that is the total of assets as well as liabilities, asset or equity and liabilities by preparing the balance sheet. And the next one is to provide information about the economic resource, that is the total of assets and what is the liability of the business. So in a whole financial year, what is the total assets or what is the total obligations or liability of the business in that particular financial year. And the next one is to provide information about the earning capacity of the business. So whether the business is in profit or not, whether the business is improving or not. So what would be the reason for decrease in the profit? So to know the earning capacity, also we have to prepare the financial statement. Next is to provide the information about cash flows. So cash flow is also one of the important financial statement. So by preparing cash flow statement, we'll come to know what is the cash inflow and outflow of the business. So we have to exactly provide information about the cash flows. Next is to judge the effectiveness of the management. So whether the management is running effectively or not. So these are the few objectives of financial statement. So I have told you they might ask you what is the meaning of financial statement for 2 marks, or they might ask you write any 2 objectives of financial statement. So you can write any of the 2 objectives here. And the next topic is characteristics of financial statement. So let us see what are the characteristics of financial statement. So the first one is financial statements are related to past period and hence are historical documents. So I have told you we are going to consider whole year's transaction. So what does it mean? We are going to record all the historical costs which has been passed out. Correct? So our financial statement are related to past period and we are going to record only the historical cost already which has been recorded. Correct? And next one is they are expressed in terms of money. So the transactions are expressed in terms of money. So there are a number of transactions that takes place daily in a business, but we are not going to record all those transactions, but we will record only those transactions which is measured in terms of money. And the next one is financial statements show profitability through statement of profit or loss and financial position through balance sheet. So these are the characteristics of financial statement. So the first characteristics is what? We are going to record only the historical cost which is already been passed out. And the next one is they are expressed only in terms of money. And the next one is financial statements, or by preparing the financial statement, we are going to ascertain the profit or loss of the business as well as financial position of the business. So these are the characteristics. Next topic is nature of financial statements. So as I've already told you, the first nature of financial statement is recorded facts. We are going to record what? All the historical costs which has been already passed out and which has been already the transactions have already taken place, correct? So the term recorded facts means that the data used for preparing the financial statement are drawn from the accounting periods. So based on the accounting period, we are going to record the transaction. So accounting period will be normally 1 year, which starts from 1st April to 31st March. The transaction that have taken place in the month of April also will be taken out in order to consider the financial statement where we are going to present in the month of March. So it is all historical cost. The assets purchased at different times and at different prices are shown in the balance sheet at their actual cost. But when we are going to record the transaction in the books of account on the date when we have purchased. But do you think at the end of the financial year, the value of that particular asset which was purchased in the month of April or May will be same at the end of March? No, it might have increased or decreased. But when we are going to record in our books of account, when it has actually purchased, when we are going to actually purchase. So we are going to show in the balance sheet at their actual cost. They are not shown in the balance sheet at their realizable value or replacement cost. So we are not going to record that value of asset and liability on that particular day. Correct? So we will record their historical data or historical date only when we have actually purchased, not on the day when we are going to prepare the financial statement. So it is all recorded facts. And the next one is accounting conventions. So we are going to consider accounting conventions under financial statement. So accounting conventions imply certain fundamental accounting principles which have gained wide acceptance and which are followed while preparing the financial statement. So we have learnt about accounting conventions in our first PUC. So while recording in the books of account, so we have to follow the accounting conventions because it has been widely accepted throughout the world. So we are going to follow certain accounting conventions. For example, due to the convention of conservatism. So what does convention of conservatism tells? Be prepared for the worst. Always be prepared for the losses, but don't anticipate the profit. So here, due to the convention of conservatism, provision is made in the books of accounts for expected future losses. So we are making the provision for the expected future losses, but expected profits are ignored. So this is a main concept of convention of conservatism, which tells us being a businessman, we have to be prepared for the losses. Keep the provision for losses, but whether we will be prepared for the profit? No. So likewise, the closing inventory is valued at the cost or realizable value, whichever is less. So there are certain conventions which has to be exactly followed because it is widely accepted and we are following in the books of accounts. But here see this, inventory is valued at the cost or realizable value, whichever is less. This means that the actual financial position of the business may be much better than disclosed by the financial statement. So actual financial position which shows at the end of the financial year might be actually different by preparing the financial statement because we are going to record the amount when it has been actually incurred, not when actually we are going to realizable the value. Correct? So that is about accounting conventions. And the next one is personal judgment. So our financial statement might be based on personal judgment also. Even though certain accounting conventions are followed while preparing the financial statement, still personal judgment of the accountant plays a decisive role in accounting. Even the personal judgment of an accountant while preparing the financial statement plays a very important role, even though if we are following lot of accounting conventions. For example, the accountant has to decide. So we have various methods to calculate the depreciation. So in your first PUC, you have learnt about straight line method, written down value method. But based on the decision of the accountant, so he will decide whether I have to calculate depreciation on a straight line method or written down value method. So personal judgment of an accountant also plays a very important role. Correct? So for example, an accountant has to decide whether asset to be depreciated on straight line method or written down value method or some other method. So he is to apply his personal judgment while deciding the rate of depreciation also. So it is not only in terms of depreciation, various other accounting calculations also. It is based on the decision of the accountant whether he has to follow a particular method or not. So these are the nature of financial statements. So now we shall discuss an important concept of this chapter, that is format of balance sheet as well as format of statement of profit or loss. So as I've told you, Companies Act 2013, under that Schedule 3 Part 1, which gives the format of balance sheet, and Schedule 3 Part 2 gives the format of statement of profit or loss. Now as per Companies Act, let us see what is the format which is being given. So balance sheet as at. So you will start with heading balance sheet asset. So they have given the, suppose if they have given the date, you will write the date. Balance sheet asset 31st/3/2023, 31st/3/2022. You will write the date. So this will be the format. Your format is particulars. Then you have note number, figures at the end of the current reporting period and figures at the end of previous reporting period. So this is just a format. Now this you have to know. As per this order only you have to write the balance sheet. So the first one is equity and liabilities. Under that, the first one is shareholders fund. Below that, under shareholders fund, we have share capital, reserves and surplus, money received against share warrants. Now as per your PU board, you have these. Under shareholders fund, you have share capital and reserves and surplus. Normally, they will not give you money received against share warrants. So, you have to know this format, children. So, how to write this? First, you will write Roman number 1, equity and liabilities. Under that, first one, shareholders fund. Below that, share capital, reserves and surplus. And the C is money received against share warrants. It will not be given as per the PU board. And the second is share application money pending allotment. So this is also part of the format, but you don't have in your PU syllabus, no need to worry. And the next is, third is non-current liability. They will give you non-current liabilities. So under that we have long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provisions. So these comes under non-current liabilities. So once again, equity and liabilities, under that shareholders fund, first one share capital, reserves and surplus, and third one is money received against share warrants, and the second one is share application money pending allotment. Third one is non-current liability. Under that, whatever based on the problem, whatever they have given, you will write non-current liabilities. But easy to identify. Long-term means what? Long-term. Or non-current means what? It is long-term. So, long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provisions. And the fourth one is current liabilities. Current liability in the sense it is for short term. Okay, so short-term borrowings, trade payables, other current liabilities, short-term provisions. Then you will total. Okay, so this is a part of liability. So it should be in the same format only. So in our sole trading concern, we used to have 4 columns where liabilities amount, assets amount. But as per Companies Act 2013 statement, financial statement of a company is different, where you have to follow this format. Okay, so your first one is what? Equity and liabilities. Under that, shareholders fund. Below that, A, share capital, B, reserves and surplus. And the second one is non-current liability. Third one is current liability. So this will be there for your exam as per your PU board. Okay. Now coming to assets. Your Roman number 2 is assets. Under that, first one, non-current assets. Under that, A, fixed asset. Under fixed asset, you have tangible asset, intangible asset, capital work in progress, intangible asset under development. Now, as per PU Board of Karnataka, you have first assets, non-current asset under that fixed asset, tangible and intangible. If you learn these two is enough. And the B is non-current investment. Certain times they will give you this non-current investment also. Deferred tax assets, and the next one is long-term loans and advances, other non-current assets. So these comes under non-current assets. Next, current assets. So they will give you certain current assets also. Current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. So under assets, you have only two classification, non-current assets and current assets. Okay. Then you will get the total. The total of liability should be equal to total of assets. So this will be the format of balance sheet as per Schedule 3 Part 1. So hope you are clear about the format. When you are going to solve the problem, you can clearly understand. Next is format of statement of profit and loss. So this is as per Schedule 3 Part 2. Okay. So statement of profit and loss for the year ending. So they'll give you the year ending. You will write that date. And your format is simple, children. In the sense columns are same. Particulars, note number, figures at the end of the current reporting period, figures at the end of previous accounting period. Your columns are same. Now this you have to learn. Okay. So the first Roman number 1 is revenue from operations, and the second one is other income. Third one, total income. So when you add 1 plus 2, you will get total income. Fourth one is expenses. Under expenses, it varies depending upon the problem. They will not give you all the expenses. They will give you 2 to 3 expenses. Okay, so here cost of material consumed, purchase of stock in trade, changes in inventories of finished goods, work in progress and stock in trade, employee benefit expenses, finance cost, depreciation and amortization expenses, other expenses. If you add all the expenses, then you will get total expenses. So, hope you are clear with Roman number 1, revenue from operation, Roman number 2, other income, third, total income, fourth will be expenses. If you add all the expenses, you will get total expenses. Fourth one is profit before tax. How do you get profit before tax? Your total revenue minus total expenses. 3 minus 4, you will get profit before tax. 3 minus 4, you will get profit before tax. And the sixth one is tax expenses. So there they might give you percentage. Based on that, you will calculate percentage. Then you will get profit after tax. How do you get profit after tax? Profit before tax minus tax expense, you will get profit after tax. So this will be the format of statement of profit or loss. So what is the format? Revenue from operations, second other income, third total income, fourth expenses, fifth profit before tax, sixth tax, seventh is profit after tax. So this is simple. So in this chapter you are going to, or they are going to ask you 6 marks questions. So it may be based on balance sheet, where your format will be equity and liabilities. Roman number 1, equity and liabilities. Under that, first one, shareholders fund, A, share capital, B, reserves and surplus. Second is non-current liability. Third one is current liability. If you learn this much is enough. And as Roman number 2 is assets, where you have non-current asset. Under that, A, fixed asset. Under fixed asset, you have tangible and intangible. Next, B, current asset. So you will total, and the total should be equal. So this is about the format. So in the next class, we shall solve the problems on this statement of profit and loss as well as balance sheet, so that it will be clear for you to know the format. Just time being, you learn the format. Next class, we shall solve the problems. So as I told you, in my next session, I am going to discuss problem on statement of profit and loss. This is as per Schedule 3 Part 2. Okay. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.